Arizona's housing market is about to explode, but most investors are probably going to miss it. Or worse, they're going to come in late and they're going to get burned. This isn't hype, because the data is clear. Population is surging, jobs are pouring in, and the inventory is at a record low. And this is a recipe for massive price pressure. If you own property, or you're thinking about investing, or even if you just want to understand what's coming, you need to hear this before the market moves, because this could be the biggest opportunity of 2025 or the biggest mistake you make. Is Arizona becoming the hottest real estate market in America, or is it just the next bubble waiting to burst? What do I see happening right now? I'm going to give you my insight, and I'm going to tell you why I think this is happening. You know, we've seen over the last year, as interest rates continue to rise, we've seen inventories drop. In my local market, I was checking on it just this last week. We were looking at houses that were between 2 and 2,500 square feet, that were 4-bedroom, 2-bath. There were 19 on the market. Now, that sounds like, 19, that's a decent number. Not compared to 2 years ago. There was almost 85 on the market. What's happening is, as builders slow down to retain the price because of the correlation between supply and demand, as they slow down in sales, they slow down in starts, which is creating enough demand that's keeping prices where they're at. That part, coupled with what it costs to finance the house now, has narrowed the pool of buyers. So you have less buyers, you have less sellers, but we're not out of whack. And I think that when you talk to most people that are involved in our real estate investing markets, they are looking at the supply and demand, and they're staying fairly even. This is the biggest thing that's different between here and 2008. 2008, we had a bunch of housing burst, interest rates were resetting, people couldn't afford them, and there was also plenty of inventory. So we had an equilibrium until houses started to come back into the market. With what was already in the market, we now had an excessive supply, which caused prices to collapse. We're not seeing that right now. The other thing that we have is we have a huge part of the population that's locked in on 2 and 3% mortgages. And let's just be honest, those guys aren't going anywhere because they can't afford to. Yeah, they've got equity locked up, but even with that equity freed up to go buy the next house, they're going to pay substantially more because of the interest rates they're going to encounter. And so this is why we're seeing this happen. You combine that with what's going on in the chip manufacturing world and the people moving out of states that they don't quite agree with. Let's just call it the left coast. They're moving into areas that provide jobs, that provide infrastructure, that have great resources, that have got goods and services, that have the kind of amenities that they're looking for. And Phoenix, Arizona, Tucson, Arizona are fitting that bill. So people are moving in there in droves. The housing supply has stayed tight. So as they continue to go, we're starting to see that we are at a point where we're getting down to the nitty-gritty, and we're going to start to see that pressure is going to force builders to build more. And when that happens, you're going to see a massive boom. You've got population moving in, you've got jobs available. Those are the kind of things that every market looks at. But let's talk about what's really pushing the Arizona market. Is it just the population growth, or is something bigger behind the surge? Well, it has a lot to do with population growth, but as you know, populations that are healthy need jobs. They need inward migration, because that is what keeps a population alive. Let's be honest, there's large parts of California and Florida that have a mostly retired community, and that community's dying off, but they're not being replaced because it's too expensive, which is causing those economies to see price migration in a downward direction. When there are more listings than there are buyers, you wind up in a place that is not short on supply. In fact, it's quite the opposite. And the opposite of that is prices being lowered. You know, we're talking about houses being on the market 60 to 90 days. I got to tell you, man, I've been doing this for 30 years, and I've seen that is very, very normal. When I look at my whole career, right? When I look at the whole 30 years, granted, if you're only looking from 2019 on, those COVID years, that was a different story, but it wasn't what the 10-year average is, or even the 20-year average. So when you look at that, the growth markets are coming from a constriction in supply, they're coming from an inward migration, and they're coming from good jobs. When you see what's being invested in the CHIPS Act, through the CHIPS Act into Arizona, you're seeing a lot of things that are going to be booming there, including good jobs and then the ancillary jobs that comes with those. Everyone loves a hot market, but what's the real risk here? The real risk is you could be the last guy to the party and you're jumping in at the top side of the curve. But what could burn investors who jump in? It's those that jump in without a plan. You have to understand the correlation between affordability and interest rates. There's a lot of people that understand that. There's a lot of people that bought at the peak of the market in 22 but got in on a 3% interest rate. Well, their payment is substantially less than it is today. And if you look at their amortization schedule, that's the schedule that the bank gives you that says, hey, every month when you make a payment, this much of it's going to interest and this much is going to principal. Those that are in a 2 to 3% economy, a 2 to 3% interest rate, they are applying almost double the amount to the principal pay down of the loan than those that are in at 7%. And the ones that are in at 7% are paying a much higher payment. But here's the thing you also need to understand. It's not just about affordability and interest rates. It's about how much product is on the market. And why buying in the wrong place at the wrong time is dangerous. Just because there is a lot selling, just because the housing prices are inexpensive, doesn't necessarily mean there's demand. So you've got to understand what is booming and you've got to have a plan. And when I talk about a plan, you need to know your investment thesis. You need to know, why are you doing this? What is your end goal? What looks like success for you? And what are you willing to put into it? Because if you're trying to do this without a plan and you're buying this one here because somebody gave you a great tip on it, you're buying that one over there because somebody said that was going to be a great area, you don't really have a plan. You've got to do your research. You've got to understand what looks like success for you, and then you've got to take action, not before. Let me tell you, if I'm putting money into Arizona right now, I'm going to focus on new construction. I'm going to focus on areas like Surprise. I'm going to focus on areas like Scottsdale. I'm not going to focus in downtown Phoenix, right? I'm going to focus where it's close to goods and services, where it's close to jobs, where it's close to the expansion where things are going, because there's a reason why things are going out there. I'm going to look for deals that make sense. I'm going to look for value add in the construction area. Phoenix has got plenty of old product. I don't want to be the next guy to inherit somebody else's 30-year-old problem. I want to be the guy that's creating the new product that is going to attract the higher wages. Because as we know, those that are at the bottom end of the rent spectrum are paying a higher percentage based on their wage toward their rent than those that are at the top end. Those that are renting the newer apartments tend to spend less than 30% on their rent to get into those, to be able to afford those, because they are more upwardly mobile. They've got a higher salary. They've got a higher wage. And that's important for me. So when I look at that, I'm going to look at where the new areas of growth are and why. One of the biggest things that I look for that a lot of people don't consider is I'm not just looking for rent growth. I'm looking for wage growth. And you can find that. You can find that through census data. You can find that through other sources, but you need to know what areas of town have wage growth, and those are the ones that you want to be building in. So look for your submarkets. Look at your build-to-rent product. Look at some of the value add without being so focused on getting into something that's cheap. You know, I see this all the time where people go in and they buy the cheapest thing they can find and they're constantly repairing it. It's like an old car. Once you get this going, that blows out. And you know what? I've built over $465 million worth of projects, and there have been times that I have watched people jump into hot markets and lose everything because they didn't know what they were doing, they didn't have a plan, and they definitely didn't do their research. So don't be one of those guys. Do your research, make sure you have a plan before you do anything. And if you're ready to take advantage of Arizona's growth, let's talk about it. I'll show you the exact strategies I'm using to position my portfolio for this boom in Arizona and other places. So book a call with me. The link's below. And if you watch this video till the end, well, you definitely want to watch the next video on how to pay zero taxes. You can watch that video here. It's on the screen right now.